Hello traders, Gary Wagner here. Approximately 11:30 in Honolulu, Hawaii. It is Monday the 19th day of September, and this is the daily report for gold. We have gold under significant pressure this morning. Was trading in Australia as it opened up a little bit higher. In fact, at some points it was up as high as about $12 higher on the day. It did find some resistance in the market, and when we found that resistance, we followed suit as the market came lower, currently trading down about $34, 1778.53 as you see a current print on the board. I've added a new chart that we'll be using on a daily basis, and it is what's known as simply a tick chart. And the nice thing about a tick chart is as volume changes, since we are going by the number of prints or ticks, you will still get nice sized candlesticks and very interesting reads on the market. This is 161, and you can see where the market opened. This is Sunday. You can see the resistance that it found at around 1825. I put a chart up online last night as I saw that resistance coming into the marketplace. We have added to the members portal, and if you notice, when you go there below the portal itself, I will be placing charts throughout the day. We will be using our Trade Alert apps to notify users as to when those charts go online. For those who do not have the Android system, there are compatible programs that allow you to download an Android onto your PC, and I might recommend that. You can email me if you are having trouble finding that. But you can see the resistance that we found in there, and you can see from there the market pretty much took up a straight line down and is now kind of consolidating. We're at the bottom end of the range, and we're narrowing in range also, as you can see here, which brings me to our second chart of the day. And really, this is the chart that I actually put up online yesterday. And what I want to spend a moment with, it's a 120-minute chart. I'm using it to plot the angle or descent as we narrow in this triangle correction, if that's what it's going to be, because traders, realize this: if we get a hard break, I don't know that that's likely, but if we get a hard break in this area and the market goes south of this line right now, it's a more traditional ABC correction. We can look for lower prices because what we're not getting is that narrowing of range. But when I put this chart up last night, and you can see it online, you'll notice I put these lines here because I noticed that as this market came up, I could draw a trend line up in this area, and we were finding real resistance each time it hit that top here, and then I saw another one right here because those kind of match these areas right in here, and this dip here, and of course these particular highs here. So I saw that we saw some real resistance in the marketplace, but what I found interesting this morning is when it came down, and when we look at the marketplace itself, you can see that it has, at least on a tentative basis, found some real support. I am looking at this very carefully because my sense is if it does find support in this area, it's going to trigger a nice buy in here. The caveat, the caution, of course, right now is that if it breaks below this, it's really got a significant distance to go because it really is a breakout to the downside. Now, traders, we're looking at a daily chart. In this daily chart, I have added a Andrews pitchfork, and I simply took the angle of the Andrews pitchfork and cut it, copied it, and pasted it up here. So what I am seeing that's interesting is that once it did hit the upper bounds here, it made its second attempt. This is the two double tops above 1900, of course. But as you can see, this market has genuinely, on the first stab, went all the way down to the bottom of the channel line, then came back up, and now appears as though it's headed back to the bottom of the channel line. Now, where would that actually put us? To do that, what we would simply want to do is carry this over, and as you can see, it's between 778 and 774, so call it about, or 1700 and 1778, so call it about 1774 is possibly where this market might in fact find some support. So traders, there can be no doubt that we are absolutely in a very, very critical area on a technical basis with this market, as we have seen these lows create real support in the area, but then it comes back down and it tests it right here. If in fact the market holds, we have a clear-cut game plan. If it does not, where could it go? Well, you realize that on this kind of an angle here, our different bands of support are pretty much below the marketplace itself. And these would be the three areas or bands that I would look at if we get continuing softness in the market. My sense is that I should say, that we should find some sort of a bounce, and from that bounce, trade back up. Until I get confirmation of that, I don't mind buying the breakout, but I certainly want to get our timing right. And so I'm going to look throughout the day at this market. We're still in a holding pattern, but it's critical as to how the market reacts right in this area. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.